Let me now bring on board Nizam Idris, Head of Emerging Market Forex Strategy at Macquarie, and he joins us from Singapore. Nizam, good morning and thank you for joining us. Nizam, while the Fed tapering has started, would you say that it really has been fear versus fact, as markets haven't really seen a hit due to tapering? What is your sense? Do you think this time around, even though tapering is on the table, it is more like a storm in the teacup?
But for me, I think the tapering has resulted in a more muted reaction only because unlike May to August this year when the Fed first spoke about tapering and the market reacted nervously, this time around it feels like the Fed has convinced the market that tapering QE3 purchases doesn't actually equate to end of monetary easing, and so the muted reaction. But for me, I think we should continue to expect more reaction going forward. For me, it should start from higher US Treasury yields, which will probably also mean that there'll be some pressure on EM bonds market. And from there, if we do get outflows from EM bonds market, then we should see further currency weakness in Asia. That should be expected, I think, in the earlier part of 2014. Now, the other key factor is obviously when tapering comes with strong growth, then obviously that could actually mean that expectation is more positive. The market may be less nervous, but if growth do not return in a big way, then you could probably see further reaction as well.
Nizam, hi, morning. So how do you see the dollar index in 2014? Many analysts are calling 2014 as the year of the dollar.
I mean, that's cool. I think the dollar will strengthen in 2014. I think it is worth remembering as well that 2013 wasn't a bad year for the dollar. The dollar basically weakened against sterling and the euro and maybe also Danish kroner, but strengthened against most everything else. I think the dollar index was like 1% higher for 2013. For me, I think 2014 could see a slightly better performance than that. We are looking for 3 to 5% appreciation of the dollar index. And, like I said, the difference here is that the tapering is taking place. The Fed is easing less, printing less money, and probably by the end of 2014, the Fed could actually stop printing money altogether. And the difference in monetary policy relative to, say, Europe and even Japan, both of whom are still not keen to end quantitative easing, then you'd probably look at a stronger dollar. So yeah, I mean 3 to 5% appreciation in 2014 is probably likely.
So Nizam, do you expect Asian currencies seeing a reaction in Jan when tapering actually starts?
I think we have already started to see some reaction. I mean, dollar is strong in December, which is not the usual thing. I mean, the usual seasonal movement in the dollar in December would be for weaker dollar, higher stock market. They call it the Capricorn effect, for example. We are not seeing that. I mean, stock markets are higher, but the dollar is strengthening still. I think that, in my view, the difference lie in the fact that the Fed is tapering, and therefore the dollar is strengthening. We will see more of that effect into 2014. And in my view, I think insofar as dollar Asia is concerned, the big question is whether the tapering comes with very strong growth. Because if there is strong growth, then Asia could benefit from that. As of now, I don't see that. The simple indicators that we are looking at right now is, for example, looking at the PMIs, the ISMs, globally. That strength in PMIs, ISM have not been reflected in stronger Asia exports. So what I'm saying really is that the recovery in the US economy is modest. And as of now, it has not been translated into stronger export demand for Asia output. Unless we see very strong growth out of the US, leading to very strong growth in Asia exports, I would still expect dollar Asia to be higher into 2014.
Nizam, the Indian rupee has seen, a near 10% fall in 2013 on high current account deficit, inflation concerns, etc. And now with Indian elections kicking in, how do you see that impacting the economy as well as the currency?
Right, I think the Indian rupee has done well on the promise of reform, right? I mean, to be fair, Raghuram Rajan has come in as the governor of RBI and has basically led by example. His first speech was to talk about liberalizing the banking sector, which is, a kind of reform. Now, the question is whether, this expectation of broader reform, broader economic reform coming through from the election. In other words, the market expects Narendra Modi to become the next Prime Minister, leading the BJP in the upcoming election, will mean that the new government, the incoming government, would be more pro-market, pro-reform. So that's been priced in. I think that's been, some of that is being priced in. Now the question is whether that sort of expectation could be delivered. Now all these talks of reform needs to be delivered, because at the end of the day, I'm still looking at current account deficit of around about $50 billion for India. You need to, fund that current account deficit. There's still a large current account deficit of around about 3.5% of GDP. To fund that, you need FDI or foreign direct investment. And for foreign direct investment to come in, you need reform to be strong. So, expectation has been good so far. Rajan has been doing the right things. But, the incoming government after the May election need to deliver reform. Otherwise, I think